Welcome to AM Best Audio.
U.S. retail annuity sales reached a record $461.3 billion in 2025, marking the fourth year of all-time highs, according to LIMRA. Indexed products, particularly registered index-linked annuities and fixed index annuities, continue to capture a growing share of the market, now representing 45% of total sales. As more than 4 million Americans turn 65 annually during peak 65, demand for protected growth and guaranteed income solutions remains strong, even as interest rate shifts and evolving investor preferences reshape product dynamics heading into 2026. I'm Lori Chortis for AM Best Audio, and joining us now to discuss that and other key findings from the research is Keith Golembiewski. He's Assistant Vice President and Head of LIMRA Annuity Research. Keith, welcome. So great to speak with you again. Thank you so much for joining us today.
You too, Lori. It's always great to talk about the U.S. annuity market, and we are in a dynamic and interesting time period. So thanks for having me.
It definitely is a dynamic and interesting time. And can you tell us a little bit more about that? Keith, what factors are driving the sustained record-breaking growth in U.S. annuity sales, particularly in indexed products?
Yeah, Lori, that's a great question. As you mentioned, we just completed the fourth straight year of record annuity sales. So sales have been fantastic. We've really seen a mixture of factors, of course, a number of tailwinds on the positive side, as well as headwinds where annuity carriers, distributors, and financial professionals have had to really navigate. On the positive side, of course, interest rates and the equity market have been very strong. We've seen really strength over the past 3+ years on the interest rate standpoint. That has really resonated. And of course, that has helped some of those index-based products that you mentioned, the RILA and the FIA standpoint. Even during 2025, the Treasury yields were still very strong. I think the 5-year Treasury was about 3.75% as we were heading out of 2025. That is really allows annuity products to resonate for many financial professionals. And then when we think about historically speaking, those are significantly higher than what we saw probably post 5 years ago. And then from an equity market, right? S&P 500, we've had 3 really fantastic years. 2023 and 2024 had 20+% annualized growth. And then even in 2025, I think it ended about a 16% growth for the S&P 500. And then in January of 2026, we continue to see some of that growth. I think January grew about 1%. So strong equity market, strong interest rates. And then I think 2 other areas of focus. One is just the ability for annuity carriers to do this amount of business. So from a capacity standpoint, there's a lot of capital that was available to allow these companies to continue to offer strong products and have that those capabilities to allow the growth that we've seen and hopefully future growth as we continue. And then finally, from a demographic standpoint, the peak 65, the need for guaranteed income in the decumulation phase. And I think as we face that retirement crisis in the U.S., annuities are really resonating too. As you mentioned, protected growth, guaranteed income, downside protection. flight to safety, right? There's a lot of dynamics happening, and I think those all are contributing to those record-breaking growth that we've lived through over the last 4 years.
Keith, when you look at registered index linked and fixed indexed annuities, why have they gained such significant market share over the past decade?
Yeah, we can tackle the registered index-linked annuities first. This has been a product line that we've seen growth every year for over a decade. This is resonating or has resonated across many broker dealers. You're seeing more annuity carriers offering the RILA type of products. I think we're up to about 24 annuity carriers that have some type of RILA solution. You're seeing more broker dealers adding them to their product platform. And I think from a financial professional standpoint, the growing awareness on the product itself, I think, is helping continue to grow these type of products. We're also seeing various innovations happening within the product line. So we're seeing new indices being used. You're seeing new crediting methods. You're seeing the launch of new GLB or guaranteed living benefit riders being offered on these products. So it's meeting a wider need for the end consumer or customer. So it's really, I think, continuing to grow in sales and eventually, hopefully, reach that capacity as being a go-to product line. On the fixed index annuity product, that product has been out in the market for more years than the RILA product, but it has a similar kind of the product feel. Various new indices being launched, new crediting methods, new living benefits. So again, it provides all those values that you see on the RILA side. And in this case, on the FIA side, it provides more downside protection for those risk adverse clients. You're also seeing, more recently, you're seeing some new indices that could resonate with the younger demographic. So some of the indices are incorporating some of the digital currency, things like Bitcoin. So again, trying to provide access to different financial instruments, but within some type of protected product solution. So, index-based products are resonating. I think it is providing that perfect mixture of upside, downside protection, and then guaranteed income. And that's where we're really seeing, I think, as the aging of America, as we're seeing a lot of the individuals reaching age 65, that need for the annuity solutions is so big today, and more so than what we've seen in the past.
Customize your data experience. BestLink now offers an interactive company dashboard that provides company-level intelligence in a fast, user-friendly interface featuring interactive tables, charts, and Sparkline performance histories. Customize the dashboard tiles to prioritize the insurer ratings, data, and analytics that best support your workflow. AM Best. Our insight, your advantage.
Keith, how are interest rate expectations influencing demand for fixed rate deferred annuities and other protection focused products?
Yeah, it's a great question, Lori. So overall, interest rates continue to be higher than historical norms. So I think that has helped just keep sales elevated from prior years. So these products, like the fixed rate deferred annuities, they're significantly higher than other financial instruments out there, like a bank CD. Right now, I think we're seeing about a 200 basis point spread for some of these fixed rate deferred annuity products over what they could get within a bank CD type of solution. In 2025, we did see 3 rate cuts from the Fed. So that did lower as we headed through 2025, that did lower some of those rates. So you did see that flight to safety, and you did see a lot of financial professionals trying to lock in products that were being offered in 2025, trying to get lock in their clients into some significantly high interest rate environment. So you did see some of that activity as we head into 2026. So far, rates, as I mentioned earlier, rates haven't declined so far in 2026. They're still very attractive. So I think you're going to see continued utilization of those type of products throughout the year. I think one big change since the last time we talked was just in regards to the Fed. I believe sometime mid-year you're going to see a new Fed chairman. So that is a point of uncertainty, just not knowing where rates will head as we head into the later part of the year. My expectation is second half of the year we could see some further rate cuts to hopefully boost the economic environment. There is a lot of headwinds just from a macro standpoint. There's a lot of household financial instability. There's various healthcare policy changes that we saw at the end of 2025. There's a number of AI bubble concerns out there. There's the potential for lagging tariff effects. There's many geopolitical tensions out there. And then from an economic government standpoint, there's recent news just around some of that sluggishness in the labor market. So my guess is with a new Fed chairman coming in, we could see interest rates come down second half. So that might push or might shed continued light on these products in the first half of the year to, again, try to lock in, try to really give some upside potential for these individuals, because we really don't know what's going to happen later in this year. Let's figure out how to utilize some of these annuity products today.
Keith, with a growing number of Americans reaching retirement age, how are carriers evolving their income annuity solutions to meet changing retirement needs?
Yeah, that is a great question. I would start with having a all-weather portfolio and or a diversified product suite of solutions. So as the retirement needs change, as we see more individuals kind of reaching this sweet spot for annuity products, having a suite of products that could work in various environments, whether it's economic environments or whether it's just personalizing or providing that customization for that individual. So I think you are seeing annuity carriers evolve their solutions. They're creating different solutions for different environments and for different individuals. So I think that's number one. I think you're also, we're seeing a lot of technology and innovation being incorporated into the annuity ecosystem. So that is improving the customer experience, not only for the end customer, but improving that experience for the financial professional and the distributor and the wholesalers, everyone that's involved in a typical annuity sale. So just incorporating that technology, that even AI, to help personalize, help guide an individual through this time period, and making sure the annuity solution really meets their needs and allows that flexibility that if their needs change as they head into or through retirement, there's a lot of solutions that are out there. You're also seeing a lot of activity within the what we would call the in-plan annuity space. So those are annuity solutions in, say, a 401k. So you are adapting, you are utilizing some of those products in really a different avenue or channel. So you're allowing more Americans to have access to guaranteed income earlier on as they are saving for retirement. So as they think about accumulation, they do have income options that can help provide that personal pension type of solution to get them through and into retirement.
And Keith, looking ahead, what product innovation, distribution expansion, or market forces will most shape annuity growth through 2028?
Yeah, as I look at this market, there are six macro trends that I'm seeing. The first one is just around capital efficiencies. So when you think about annuity carriers, it's just making sure that annuity carriers are having disciplined pricing, that they are trying to grow, but more in a prudent way. They're trying to deploy capital in a disciplined way, and they're making sure that they have a sound balance sheet so they can continue to focus on this annuity market and grow as the need for our products continue to grow. Number two, I think it's just reinsurance. We're seeing a lot of innovation around reinsurance, and it's just whether it's through block reinsurance deals, whether it's the growth of flow reinsurance, the development of captive strategies and sidecar reinsurance solutions. Lots of things happening there, and that's really creating capital that can be then used to offer new innovative annuity solutions. Third, and I've mentioned this a few minutes ago, is just around that diversification of products that are being offered. There is that RILA focus and that FIA focus, but just overall the focus on spread-based products, making sure that they are having pricing discipline, especially with that fixed rate deferred annuities, moving more towards maybe longer duration product solutions like RILA and FIA, managing some of those legacy VA headwinds, and then, of course, looking at other solutions like in-plan annuities, as well as even offering solutions for those pension risk transfer institutional markets. Number four, AI and technology, right? We've touched on some of this, but just the ability to have operational efficiencies from an annuity carrier standpoint, offering really that customer experience that now they expect based on how they shop, how they interact with vendors and carriers out there, making sure that they have the top-notch customer experience. And then that, I think, ability to innovate around personalization, making sure that that individual feels like they have a personalized solution for them, in trying to create annuities that can really provide that solution and uniqueness out there. Number five, I think it's more just around organic growth for this industry. Other industries are seeing a lot of M&A activity. I think in the annuity space, it's more about how do you grow, how do you expand and utilize all your capabilities into new markets? How can you offer new innovative products? When you think about RILA products, how do you bring in more income solutions? How do you offer some of those unique indices and new capabilities within that product line? And then I think it's more those targeted acquisitions and partnerships. So whether it is partnering with your distribution broker dealers out there, working with them, right? They're the frontline folks, so they understand really what the end consumer or customer wants, partnering and having those partnerships to really provide more value. And then finally, right, and we've touched on the peak 65 and demographics, but it is those strong drivers of consumer demand. It is providing the guaranteed income. It's trying to align to peak 65 and those demographic changes. And then even meeting some of those, the needs of some of those younger generations. And then I think just from a global standpoint, it is scaling so much of what we see on the US side. And how do you scale that from that global standpoint? Because the retirement crisis is not just US focused. There is a retirement crisis on a global standpoint.
Keith, this has been so fascinating, so informative, and it is always such a pleasure to speak with you. Thank you so much for taking the time to speak with us today. Greatly appreciate it.
Of course, Lori, this is always a great topic, and I think this is a topic that's not going to go away, right? This is annuities provides a fantastic solution, and I think it's just going to resonate more and more as more individuals need the products that the annuity market is offering. So thank you.
Absolutely. Well, thank you. That was Keith Golembiewski, Assistant Vice President and Head of LIMRA Annuity Research. For AM Best Audio, I'm Lori Chortis.
Looking to get the full attention of the insurance industry? We have the platforms that will do just that. Whether it be AM Best TV, AM Best Audio, Best Review Magazine, or Best Day. Find out more by calling AM Best Advertising Sales at 908-439-2200, extension 5399, and have a great day.